Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is a Forex Kickstart video where I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, and sterling versus US dollar from a technical perspective. Before I get into that technicals, the fundamentals showed that US jobs came in with only 12,000 increase. That was lower than the expectations, but the unemployment rate remained steady at 4.1%, and the earnings were about as expected given revisions. There were prior revisions to the non-farm payroll report, which puts some uncertainty. But we had hurricanes, we had strikes, all that is an influence as well. So I think the market's probably going to turn the page on this, although the US dollar is lower. We're seeing yields lower. The 10-year yield is currently down around 4.8 basis points. It was higher before the report. We also are seeing U.S. stocks, stay pretty steady. The S&P is up 27 points. It was up about 20 points before the number. So that's the fundamental picture. Let's get into the technicals for these three major currency pairs. Let's get started. All right, I've been talking about the euro versus US dollar and putting this box around the trading range. We broke up below the 200-day moving average in trading 2 weeks ago and stayed below that level through here and here and here, moving to the downside. And then we came to this swing area down here, which was defined by a number of different swing lows and swing highs going back in time, starting here and here and over here and here. And even here. So you can see why that level was important. Last week's trading, we came down to that level and found support buyers not once but twice. And this week's trading, we came down to that support level and found support buyers once again. So this box was confined the trading range. Now trading yesterday, we moved above that box and moved up toward to the 1.088888 level. That level was somewhat random. I just put a horizontal line against that level because it was a high price earlier today as well, before the market moved back down and tested the 100-bar moving average on the 4-hour chart before the data, and also moved back below the 200-day moving average. The data has pushed the price above the 200-day moving average and above the high prices from earlier this week, but we fell just short of the 50% range of this move up from the low price going back to the month of April right here. This is low from April to the high price that we saw in the month of September. That was our next key target to get to and through on the top side. If we got above that level, we look toward the 100-day moving average. So although we're currently above the 88 level, and we'll watch that as really close support, also the 200-day moving average is going to be a more conservative support, stay above that level, and will tilt the short-term bias to the upside for the euro versus US dollar. But we need to get above the 50% retracement level. That was our targets before the number, and it remains a target on after the numbers. So get above the 50% retracement is needed, and that level also corresponds roughly with this swing area going back in time through here. This yellow area, just blur your eyes and you can see there's support and resistance at that level, including through here. So be aware of those levels. That's the buyers are more in control, but we'll see if they can keep that control for the rest of the day by staying above those technical levels. Let's take a look at the dollar versus yen next. And again, I'll look at the 4-hour chart for this currency pair. And what was key for me, not only today, but going back in the past, was this area right here around 151.85 up to 151.937. And you can see that we came down toward that level earlier this week on a number of different occasions. We actually broke a little bit below it, as you can see right here in trading. I guess that's yesterday or maybe early today. And we've moved back down toward that level. Currently trading at 151.93. So we're just within that area. Again, it comes between 85 and 93 or 94. The low price stayed within that level in trading here today. So that needs to be broken to increase, to give the sellers more control. Now that control is dependent upon getting below a number of targets down here, including the 200-day moving average. That comes at 151.53, so not far from the break of the 93 level would be the 200-day moving average, but it's still 40 pips or so, or 85 level, I should say. So 30 or so pips to get to the 200-day moving average. You need to get below that. We also need to get below the 50% midpoint at 151.757. That's how this moved to the downside. We also need to get below the 100-day moving average at 154.1. This is a big cluster of key technical levels that in the short, medium, and longer term will define the bias for this pair, not only today but going forward. Should include the 200-day moving average, but you get my point there. So be aware of that. That as long as the price remains above those levels, the bias remains at least more in favor of the buyers in the medium and longer term. Let's just put that in. So be aware of this area, not only today but going forward. But in the short term right now, we're watching the 151.85 to 93 level. If we hold support against this level, then obviously the buyers are still in control, and we can push higher with the 152. Well, it just keeps the buyers more in control with a look toward the 61.8% retracement is another key target. By the way, in trading this week, the high prices this week stalled right at the high price going back to this day right here. That came in at 153.88. So the last three swing highs right here before we move lower, right here and right here, all stalled at 153.88. Keep that level in mind going forward for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. And we in trading this week, we moved down to including yesterday, moved down to the low of this swing area right through here. I had here marked as a swing area where the price needed to get below, but it couldn't. And we started to move back to the upside in trading here today. As a result, we got the push higher above this other level at 129.38. What's the importance of that? Well, I'm going to put a horizontal line across from the start of its importance right here. And just blur your eyes and see support here. See resistance here. See support here. See support here. Break the support. Fail. See support. Break. Go lower to our next target. Move back above. So we're back above the 1.2938 level. The problem with that is that we have this cluster of moving averages, including the 100-day moving average, which is always key at 1.2978, and the 38.2 and 100 bar moving average on the 4-hour chart at a nice natural level at 130. We need to get above all those levels to increase the bullish bias. So far, we haven't been able to do it, but we're pushing higher. Watch the 1.2938 level as close support now. Stay above that level, and we can still push that ceiling. And if we get above those levels and stay above the levels, including the 130 level, that would increase the bullish bias. We tried to get above the moving averages here, and we moved above the 130 level earlier this week, but that was not sustained, and we moved lower. So we do have a history of breaking above and failing, but we'll see if that the second time, if we're able to get above that 130 level, works. There you go. To look at the three of the major currencies after the U.S. jobs report. My name is Greg Mikulowski. Good fortune to trading. Bye-bye now.